I'm going to start in a couple of minutes. It's almost 12:30. Well, I'm going to get started. Good morning to some and good afternoon to others. My name is Mayarani Smith. I'm with Canyon Mortgage Corp. I'm here to teach you about business credit and also how to buy a home with your business credit. But I also want you to understand the nuances between business and regular personal credit. So my information is here. I'm with Canyon Mortgage Corp. I am a broker lender, which means that I broker to different banks. I do hard money, commercial, and residential loans nationally. So my actual seminar is on business credit and home buying. So let's get in the game. I have a lot of information. Welcome. Whether you have ever owned a home, whether you are planning on buying, selling, or both, I'm here to answer the questions on your mind. Personal credit. A personal trade line is any extension of credit, example, loan or credit card, that is reported to one or more of three major consumer credit bureaus, Equifax, Experian, or TransUnion. The credit bureaus use personal trade lines and other personal credit related information to generate your personal credit scores for lenders, typically a FICO score or Vantage score, credit score or credit report. FICO score 8 is the most commonly used consumer credit score. Personal credit scores typically range from 300 to 850. Even though you're establishing business credit, it's good to have a personal credit score. Business credit. I have good news. There are more national business credit bureaus than consumer credit bureaus, and a wider variety of business credit scores and factors that impact those scores. Business credit trade lines. There are two types of credit trade lines for a company: a financial trade line and a vendor trade line. Financial trade lines. A financial trade line is an extension of credit from a bank or financing company. For example, a business loan from a bank, commercial credit card, or tongue twister, equipment lease financing. Vendor trade lines. Vendor trade lines can have a variety of names, such as a merchant trade line, supplier trade line, vendor trade line, trade credit, vendor account, or even a corporate trade line. Regardless of the name, a vendor trade line is a report from a merchant or supplier to a business credit bureau about a specific company's payment history and when the supplier or merchant has extended them credit. An example of this would be an office supply company extending net 30 terms to a customer to pay an invoice for delivery of office supplies. Example, Office Depot, Staples. Helpful tips for trade lines. Some business credit bureaus only collect financial trade lines. Some only collect vendor trade lines, and some combine both types of trade lines. All business credit bureaus combine additional information about a company with the trade lines they collect to generate a business credit score or assessment of the credit worthiness of your business. So if you've had a business for a while, I'm going to park it right there for a minute. If you've had your business for X amount of years, you should have established some type of trade line or credit worthy with your business. They look at the long standing, how many years you've been in business. Some business credit bureaus also include information about the company's principals, owners, or individuals that control the company in the credit file for the company. Which type of trade line is more important? Well, it may depend on your objective. If your goal is to get net 30 terms with the supplier, they will typically look at your payment history on similar types of vendor trade lines. If your goal is to get a loan or credit card for your company, a financial trade line is likely going to be more important to the lender. Business credit bureaus and business credit scores. While there are three major consumer credit bureaus, there are several business credit bureaus. Some of the major national credit bureaus and business credit scores are listed below. PayNet. PayNet is one of the leading financial trade line focused credit bureaus. The primary score used by lenders using PayNet to make credit decisions is the PayNet Master Score. The PayNet Master Score is calculated using the largest database of business loans and term leases in the nation. The PayNet Master Score is used primarily for financial institution lending and leasing decisions. PayNet was acquired by Equifax in 2019 and operates as an independent division of Equifax. PayNet Master Scores range from 500 to 800. The higher the score, obviously, the better. A company's score will report as null if the company does not have any credit history to report to PayNet. Equifax. In addition to being one of the major consumer credit bureaus, Equifax is also one of the nation's leading business credit bureaus. Equifax offers multiple business credit scores. Two of its primary business credit scores are the Equifax Business Delinquency Score, which predicts the likelihood of severe delinquency on a vendor or supplier account, and the Equifax Business Delinquency Financial Score, which determines the likelihood of severe delinquency on financial accounts. Equifax business credit scores include both company principal and company credit information. Equifax business delinquency financial scores range from 101 to 650. Obviously, the higher the score, the better. Or 0 if the company has a bankruptcy, and no if it has no credit history. Dun & Bradstreet Paydex Score. Dun & Bradstreet is a business credit bureau that collects information on vendor trade lines. D&B calls these trade references. These records can include on-time and early payments on overdue debts and bills that have been sent to collections. The Paydex score is a dollar-weighted indicator intended to reflect a business's past payment performance. Companies receive a score between 1 and 100, where a higher number represents a greater likelihood that a business will pay its debts on time. The Paydex score is based entirely on payment history. Paydex is primarily used by vendors and suppliers to judge a company when determining what terms to extend on trade credit at net 30 days, net 60. Typically, the better the score, the more generous the terms, which means they will lend you more money, extended by the vendor. Your Paydex score can be important if you are seeking vendor terms or vendor financing, because having more time to pay your bills may improve your company's cash flow. Dun & Bradstreet may consider trade references of up to 875 individual vendors. 875 individual vendors. That is huge. I repeated that for a reason when determining your paydex score. Experian. Experian is a business credit bureau as well as one of the three major national consumer credit bureaus. IntelliScore Plus is Experian's premier business credit scoring model. To calculate the score, Experian pulls over 800 company and owner data points from public records, your personal credit file, and public filings. The formula Experian uses to calculate the score is proprietary, so the exact details of how each factor impacts the score are not publicly available. Experian does provide general information on what the factors impact the score. Factors that impact IntelliScore Plus. Payment history. Just like your personal credit score, payment history is the primary factor that impacts your business credit score. So it's important that your company make payments on time and that it avoids missed payments or delinquent accounts. Just like your personal credit score, payment history, paying on time, is very important. Negative factors. Negative factors include any accounts that have been sent to collections, any company or personal liens and judgments, and any bankruptcies related to your personal and company accounts. Trends can also be considered in this factor, such as your payment patterns. Are you and your company consistently slow or late with a payment? Have you started paying bills late or started making more payments on time? Obviously, you want to be on time as much as possible. Fiscal. This factor focuses on your credit utilization. For example, how much of your available credit are you currently using? Is there a high ratio of delinquent balances? Small Business Finance Exchange. The Small Business Financial Exchange is similar to a credit bureau, but it is technically a data exchange for small business credit information. Now, just so you guys know, I'm stopping for a second. I'm giving you all this information that you probably will never really have to deal with. We have companies that do set this up for you, but it's good to know the history of what goes into your business credit. And that's why I'm giving you a lot of information so that you will have an understanding. It was established in 2001 and is member-owned by small business lenders. Members of the SBFE contribute data on companies they do business with. In exchange, they can access data and credit reports generated by SBFE certified vendors. A lender must provide information to the SBFE to get information from them. I'm going to say them because it's repetitious. SBFE membership is only open to companies that originate small business credit obligations, own small business credit obligations, or service small business extensions of credit. For example, banks, credit unions, credit cards, and leasing companies. Now, this page gives you an idea of what the businesses do. The loan information, this includes payments your company makes or does not make on time to vendors, lenders, or suppliers on your credit limits for any business account. This is a scoring that they give. Business lease payment information and history, credit card payment history, your business identification information. For example, legal business name, EIN, DUNS number, corporate address, and NAICS code. Unlike other business credit bureaus, the SBFE does not calculate or provide credit scores. In addition to providing the most used credit models for consumer credit scoring, FICO also provides the business credit scoring model that has been used since 2014 by the Small Business Administration, SBA, for all SBA 7A and Community Advantage loan decisions up to $350,000, excluding SBA Express and Export Express. A FICO SBSS score is a hybrid combination of personal and business credit. To calculate the FICO SBSS, FICO uses both the information in business owners' personal credit files and the business's credit file to determine a company's FICO SBSS score. The personal credit component of the FICO SBSS score includes the personal credit of up to 5 owners, any individual with 20% or greater ownership. So it's important to build your personal credit as well as your business credit, as I said earlier, for the FICO SBSS score. If your end objective is to obtain an SBA 7A loan. So I don't know, a lot of people who are on this call may have already applied for the SBA loans. In addition to credit information, FICO also includes other details about a business, like how long the company has been in business and how many employees the company has. FICO's small business scoring service rank orders loan applicants by their likelihood of making payments on time. The FICO SBSS score ranges from 0 to 300. The higher the score, the better. A strong history of business credit with timely payments to lenders and suppliers will likely improve a company's SBSS score. As of October 1st, 2020, the minimum FICO SBSS score required to pass the SBA's pre-screen process was 155. But many SBA lenders use a minimum of 160 to 165. If a company's FICO SBSS score falls below the required threshold of 155, its loan application must go through a manual approval, similar to a mortgage. When you have a certain FICO score, you get manual approvals. So now I'm going to stop for a second. I gave you an earful. I hope you have your pen and papers ready, because now I'm actually going into the mortgage side. I wanted everybody to understand the process that goes behind having business credit. Now, before I even get into the mortgage side, I just want to say I know a lot of people that are self-employed may make like 200, 300,000 sometimes, and they write off all their credit, all their taxes to like 25,000, 30,000. It helps you when you're writing off for yourself, but it also hurts you when you want to qualify for a mortgage. If you're only declaring 25, 30,000 on your taxes, you really cannot buy a house. So we do have ways to help you if that is your situation. But I also want to share information about different type of lending programs and products. I am a broker, so I do handle hard money, commercial, and residential loans nationally. So I find the right fit for you. It's individual and is catered to whatever your needs are. You might be thinking, is now the right time to buy a home? How much house can I really afford? Can I obtain mortgage financing? What will be the right team for me? What are you hearing about the real estate market? Actually, the house prices can be high and low depending, because people are outbidding each other, but it's still a very good time to buy. And I will say the interest rates are still at a record low. And if you wait next year, you might not be in a better position. We've heard it too. There is good news. Interest rates remain at historic lows. What does that mean for you? Financing solutions that will fit your needs. Lower monthly mortgage payments. Affordable housing. Is it hard to imagine 3%? Does it pay to wait? It does not. And I'm giving you the example. What if prices drop 10% by next year? Today's price, say the house price, I'm just using low numbers to make it easy, 208,900. If you have 3.5% down and your interest rate is at 3%, your payment is $890.59. But next year, say we have a 10% decrease in the house price, and you're still doing the 3.5% down, but now your interest rate is at 4% because possibly by next year the rates will go up. So now your payment is $907.64 a month. So if you waited a year to buy this house, you would not have saved anything. Additionally, you might have missed out. So what if prices went down 10%? Example, 300,000. 10% down at 3% gives you a principal and interest payment of $1,138.33. Example, house price 270,000. 10% down at 4% interest rate. $1,160 would be your payment. So the longer you wait, my point is you will lose out because in the long run, you're going to be paying a higher interest rate and a lot more for your mortgage. Houses priced right are still selling fast. You should know recent sales in the area indicate that buying your dream home may still require you to act promptly. And what I mean by that is if you see a house on the market, don't doodle because there's always somebody out there looking for a house just like you. And if you wait a little too long, you might miss out on the offer on the house because somebody else might beat you to it. Two things we know for certain. Home prices will rise, interest rates will rise. Now is the time to buy. I want to go over the different types of financing. Conventional, Fannie Mae and the Federal Home Loan Bank. Non-conforming, private banks. Government bank, FHA and HUD, VA and state programs. What is a conventional conforming loan? Loan products that are available through government-backed entities, Fannie Mae and Freddie Mac. 1 to 4 family properties, approved condominiums. Loan amounts are up to $417,000 in certain areas, and higher areas are $625,000. That's in a high market area. As little as 5% of the own borrower's funds, the borrower must have their own money for the 5% down. Borrower's own funds are defined as checking or savings or your 401k, but it has to be your own money. You have private mortgage insurance if you put less than 20% down. What does non-conforming mean? Simply a loan product that doesn't conform to Fannie or Freddie guidelines. Higher loan balances, stated income loans. Stated income means you're stating an income for self-employed people, but you're not verifying it. Non-approved condominiums, co-ops, specialty loans, ARMs, and no PMI options. ARMs are adjustable rate mortgages. Government-backed programs, FHA, low down, lenient credit and income standards, property rehab loans, 203K with 3.5% down. VA, available to veterans with 100% financing. USDA is in rural areas, and that's 100% financing, no money down. And then you have state programs, local grants, specialized programs. No money to put down, 100% financing is available for first-time homebuyers. New York Sony May has a $10,000 grant. It covers the down payment and some of your closing costs. What is an FHA loan? The Federal Housing Administration government loan. Mortgage loan, it's a mortgage loan funded by a lending institution and insured by HUD. So FHA is the Federal Housing Administration. All residential properties between 1 to 4 units. Residential properties are 1 to 4 units. Anything after 4 units is commercial. Anything with 5 units and up is a commercial loan. Minimum requirement investment for an FHA is 3.5% down. Now, that whole 3.5% down can be a gift, and with an FHA loan, the closing costs and down payment can be a total gift. Write that down. Down payment and closing costs can be a gift, but it has to be a family member. The maximum seller contribution is 6%. What that means is the seller can give up to 6% of the closing costs on an FHA loan. On a conventional loan, the seller can only give 3%. Upfront mortgage insurance, UP, MIP, is included in an FHA loan. Another product with the FHA loan is something that we call a 203K loan. That is a renovation loan. You still only need 3.5% down. So a 1 to 4 family for 3.5% down, you can fix the property the way you want it. I gave you an ugly house as an illustration, but you can change your kitchen, your bathroom, any part of the house, because most of the houses today are not up to date. You're usually buying a house that's been in the market and been out there for 20, 30 years and needs updating. The conventional side is called a home style loan. So investors can actually buy a home style loan with 20 to 25% down, but it's only a 1 to 2 family. So I want to talk about the special discounts that are available. If you work in law enforcement, fire department, medical, educational, local, state government, military, there is a program that you can get 2% to 3.5% gift government. So that actually I want to go over. This is a down payment assistance advantage program. What this means, when you get a state grant like Sony May puts a lien on your property. So they want you to live there for like 5 years. So that lien will go away after 5 years. But I have an actual bank that will give you the whole 3.5% down, no lien on your property, no repayment required. The lender coordinates the application approval and wiring of the funds. So you could do 2 or 3.5% of an FHA home purchase. Now with this one, you can actually do the rehab 203K loan. The state and county grants do not allow the rehab 203K loan. I only have one lender that will give you the whole 3.5% for that loan. So it can help you purchase a home sooner. And it may help first responders, educators, medical. So you guys can call me about this if you have any questions. And you can still also get a 6% seller's concession. So there is always a solution to meet your needs. No money down, past credit challenges, self-employed, unique property. For investors, I have hard money lending. You can create an LLC and buy that property under an LLC. Rates begin around 7.5%, interest only, 1 to 2 year term, and it's great for fix and flip deals. Commercial lending, you can buy and hold. A 1 to 4 family purchase with an LLC makes it a commercial loan. Construction loans, construction to perm, breaking ground, construction of an existing property. So I just want to give a little reflection. Philippians 4:6-7. Do not be anxious about anything, but in every situation, by prayer and petition with thanksgiving, present your requests to God, and the peace of God, which transcends all understanding, will guard your hearts and minds in Christ Jesus. And the reason I chose that is because most people are afraid to buy a house. They're afraid to take the first step. I'm here to help you. Take your first step and walk with me through your buying process. You may not know that you're ready now, and I believe there are a lot of people out here who are ready, but are just afraid to take that step. If you guys have any questions, I'm available. Okay, I see a question in the chat. Anthony, for USDA, yes, there are rural areas in Maryland. Does anybody else have a question? I'll be honest with you, this is the best time to buy. And I would definitely recommend that you guys get out there. Um, my consultation is free. My phone number is 201-927-1008. I hope this was very informational to you, but there's so much information out there that has never been out there before. And I'm always willing to help, even if you think you're not ready right now. Because more times than none, most people are more ready than they believe. You just need to get all your documents together, and I do have a checklist. And if you do have credit challenges, I also work with people. So your minimum credit score is 620. It is 580 if you have 10% down, but the average score for any loan is 620. Any more questions? I am open, and never be afraid to ask. What you may ask will help someone else. Okay. I just want to thank you guys, and I'm glad that you were here to listen. And again, my name is Mayarani Smith. I'm with Canyon Mortgage Corp. I am Regional Vice President of the National Association of Real Estate Brokers. And thank you all for listening. Have a blessed day.